Hey everyone, welcome back to Corporate Decoder. Today we're diving into Salarius Pharmaceuticals, Incorporated's latest quarterly report, and let's just say this company is really cleaning house. Maybe a little too much if you catch my drift. This report is all about their financial health and what is happening behind the scenes, especially after a big merger. We'll break down their money situation, the big risks they're facing, and figure out if they're on the right track or just playing make-believe. Don't forget to smash that like button if you love getting straightforward insights from these SEC filings. And join our Discord community, linked in the description below, to keep the conversation going. Alright, let's jump right into the heart of this filing with their financial statements. This is where we see the real story unfold. First up, their balance sheets. Think of this as a snapshot of what the company owns and what it owes at a specific moment. Looking at their total assets on the 30th of September 2025, they had about $6.1 million. That is up from around $3 million at the end of 2024, so they've definitely grown their assets, which is generally a good sign, meaning they have more resources. But what about their liabilities and equity? Liabilities are what they owe, and equity is what the owners have in the company. Their total liabilities and stockholders' equity on the 30th of September 2025 also stood at about $6.1 million, matching their assets. This follows basic accounting rules, but it is the details within that matter. Now, let's talk about their accumulated deficit. This is essentially their total losses over time. On the 30th of September 2025, this number was a whopping negative $85.5 million. That is a huge hole. For context, at the end of 2024, it was around negative $81.9 million. So it seems like they are still losing money, and quite a bit of it. Moving on to their income statements, we see their net loss. For the 3 months ending the 30th of September 2025, they reported a loss of about $873,000. That is better than the same period in 2024 when they lost nearly $972,000. So, a slight improvement in their quarterly losses. When we look at the 9-month period ending the 30th of September 2025, their net loss was around $3.5 million. This is also an improvement compared to the nearly $4.1 million they lost in the same 9 months of 2024. It is good to see them reducing their losses, but these are still significant numbers. Now let's look at how they're using their cash, specifically in operating activities. For the 9 months ending the 30th of September 2025, they used about $3.7 million. This is a slight decrease from the roughly $3.8 million they used in the same period in 2024. This confirms they are spending money to run the business, which is expected for a company in their stage. On the financing side, things get interesting. For the 9 months ending the 30th of September 2025, they brought in about $6.5 million from issuing equity securities. That is a big jump from the roughly $1.2 million they raised in the same period in 2024. This influx of cash is crucial for a company that is losing money, and this is reflected in their cash. As of the 30th of September 2025, they had about $4.8 million in cash and cash equivalents. This is a healthy increase from the roughly $2.4 million they had at the end of 2024. It seems like they've been able to raise enough money to keep the lights on, and maybe even push forward with their plans. Let's look at the common stock details on the balance sheet. Notice how the number of shares issued and outstanding is 944,491 on the 30th of September 2025, compared to just 10 shares on the 31st of December 2024. This massive increase, coupled with the mention of reverse stock splits, suggests a significant corporate restructuring or a big financing event happened recently, which is a definite clue about their strategic moves. A huge part of this report revolves around the merger with Decoy Therapeutics. This deal closed on the 12th of November 2025, which is just after the reporting period ended, but clearly a major event shaping the company. Decoy is a company that uses artificial intelligence for drug discovery. This merger basically brings Decoy's operations under Salarius. They also had a significant financing event in November 2025, raising about $6.3 million. This offering included common stock, pre-funded warrants, series of warrants, and Series B warrants. This is a pretty complex mix, and it shows they are actively seeking capital through various means. The company states these funds will be used to advance their research, pay off some notes, and for general corporate purposes. Now, for a bit of drama, Salarius has been struggling with Nasdaq's listing requirements. They received notices about not meeting the closing bid price and minimum equity standards. However, the most recent updates indicate they've regained compliance with both the minimum bid price and the equity standard. This is a good sign for their stock being listed, but they will be under a mandatory panel monitor for a year. This means they need to stay on their toes and keep meeting the standards, or they could face delisting again. Imagine the stock price taking a nosedive if they failed this. Under the risk factors, we see some serious concerns about Decoy. It is highlighted that Decoy has never generated revenue and their product candidates are still in the early preclinical stages. They acknowledge they may continue to incur significant losses and may never actually generate revenue from product sales. This is a pretty stark admission. Developing drugs is incredibly expensive and time-consuming, with a very low success rate. There are also significant risks around intellectual property. Decoy relies heavily on patents and trade secrets, but the enforceability and breadth of these protections are uncertain. Competitors might challenge their patents or unknowingly infringe on them. This can lead to costly legal battles which could drain their limited resources. And in a more grounded but still important note, they mention compliance with environmental, health, and safety laws. These are crucial for any company, especially in the pharmaceutical industry, and failure to comply can lead to fines, penalties, or even shutdowns. While not as glamorous as discovering a new drug, maintaining compliance is fundamental to long-term survival. Looking at the overall financial picture, Salarius Pharmaceuticals is still in a tough spot. They've accumulated a massive deficit, and while they managed to reduce their net loss in the reported periods, they are still very much operating at a loss. The merger with Decoy and the subsequent financings have certainly boosted their cash reserves, which is a positive step. However, the reliance on external funding raises concerns about future dilution for existing shareholders. The company is essentially betting on Decoy's AI-driven drug development platform to turn things around. The path ahead is long and risky, with significant clinical and regulatory hurdles. Ultimately, Salarius is a high-risk, high-reward play right now. They are trying to pivot into a cutting-edge area of drug development using AI, but the journey from clinical research to a marketable product is fraught with challenges. Their ability to successfully navigate these challenges, secure continuous funding, and achieve regulatory approvals will determine their future. It is a very speculative investment at this stage. Alright? That is our breakdown of Salarius Pharmaceuticals' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord linked in the description for more talk about these complex corporate reports. Thanks for watching. See you next time.